Good evening, everybody. I hope you're well. Hello, David. Hello, Wayne. I hope things are good in your respective worlds. G'day, Adrian. Hi, Ross. Good to see you all here. Okay, so hey, Rachel. Hi, Alison. So look, I thought we'd do something a bit different. I'm going to make it a systems month, okay? So now we've talked fairly extensively about things like breakout trading before, chart patterns, MA crosses, and how to sort of tighten the game up with that a little bit. And we've even talked fundamental ideas, but we haven't really sort of covered this idea of trading a bounce, which is essentially a short-term trend reversal. Is possibly a good way of putting it. So I don't want to make a massive deal out of it, but I just thought it was worth investing a little bit of time, taking you through, but also adding something to the game, okay? And for those of you who have missed this and are watching the recording, I hope you sort of get this as well. What we're doing here is, what I'm going to do is revamping a lot of the materials for something that's going to be launched soon. So what I thought I would do is I would step back first of all and talk about putting a system together. So you've almost got a roadmap for putting a new trading system together, and then we'll use that to talk about this particular type of strategy. So I hope that's okay. And what I've also done is sort of put some logic behind it, and in terms of how to start and why all these things that I'm going to talk about are important. Good evening, Shane. Great to see you here, mate. So, and we'll obviously do our market watch as well. G'day, Ian. Good to see you here, mate. So, of course, before we start, important message. Make sure that you know that these are the opinions of me, not necessarily representative of Go Markets. But of course, we are looking at live markets. So what is absolutely critical is that you view this as part of the educational process. And as we look at live charts, then of course, please bear in mind that you should have your own trading plan or trading system, which we're obviously talking about today, to guide your actions. Okay, so that's where it's at. Let's look at what's happening in the markets now. A quick, it's like a new slide. a quick just review of what's happened today. Obviously, overnight we had US equities take a little bit of a breather from hitting record highs that they hit on Monday. We had a few stocks that were doing very well. For those of you who attended the market live session yesterday, it's been an interesting couple of days, particularly in some stocks. We actually showed an example of accumulating. We talked accumulating last week, which again was obviously a system issue. And I gave an example of that on the Market Watch, an actual real deal example, so you could see how it worked in practice. I'll reference that in a little moment or two as well, because it does have sort of relevance to sort of some of the things we're talking about tonight. And really, we had a mixed day in Asia. The Chinese and Hong Kong markets were down. The rest were slightly positive in Asia. When last I looked, we were in a place where, again, we were fairly mixed. The FTSE was outperforming, or the FTSE and CAC 40 in France were outperforming. The DAX is pretty neutral, as is the Stoxx 60. So futures are just trading over neutral, and from an economic news point of view, it's really a PMI day. That's going to be the major driver for today, along with overall market sentiment. Treasury yields are fairly stable. It just very, very slightly moved lower today. So I'm sort of surprised that we haven't seen more of a boost in equity markets, but there's not a lot of data coming out. Tomorrow's important because of the jobs data. But next week, the market's got to start having an eye on next week, because next week, US earnings season starts. This is going to impact on not just equities in terms of, are their valuations at this level justified or otherwise? I would suggest that still there is possibly more surprises on the upside than downside, but we'll talk about that in more detail next week when we meet. And but that's got to start playing on market minds a little bit. And so we may see some caution, some repositioning in light of that. So let's just have a look at some charts and see what's moving and grooving right now. Right, I just want to show you quickly this. I'm not going to make a big deal out of it because I did it on Tuesday when there were. So if we look at 0, so you can see there's 2 positions open here. There was actually 4. There was 1 at this level here, and there was another one down at this level here once it broke through the 200 MA, which is relevant to what we're talking about today. So if you were interested in how this was accumulated into, then drop me a little line and I'll flick you the recording of the lunchtime sessions we run on Tuesday and Thursday. I'll flick you a report from Tuesday and I'll show you how that was put together. But that's really been quite positive and continues to be, so you can see how 0 is doing okay on these last 2 positions, even though the last one a bit flat going on. And same deal with Qantas, but at an earlier stage. I just wanted to get this out of the way. So same deal with Qantas, you can see. So again, we had a bounce, again relevant to today. So there's an entry on this candle here, and there was another entry at the end of business yesterday, and obviously we had a move higher until Scott Morrison started wittering on about vaccines not arriving from Europe, and Qantas sold off a little bit. So we're at an interesting point with Qantas, but those travel stocks are certainly worthwhile on a long-term hold, and I'll accumulate again, and we might update this if it breaks this next level at 550. It did actually touch that today, which is sort of interesting. So, but I wanted to give you something, something real dealish to put last week's session into context. If you didn't miss it and you want the recording, again, pop me a little email. So, and I'll try and make sure that happens for you. Okay, so if we look at the US 500, as I said. Oh, sorry. No, we're all good. Mark, did you get, you were supposed to be, yeah, you were supposed to be seeing the market watch page ones which are on about the news. I didn't put up a slide with the news on. That's cool. I thought that was the case. All right, US 500 daily, you can see, look, record highs on Monday. It's really that simple. A little bit of a breather yesterday, and then today we have actually moved slightly positive on the futures. As I said, we'll just quickly pop up there. About neutral as it gets. We've been trading in and out of neutral all day, but that is just grossly neutral. You can see the VIX is pretty neutral as well. This is this sort of caution stuff going on. There's gold and silver dropping again. Silver's back down to 25 bucks. We'll have a look at the importance of that level in a moment. Really interesting moves on the currency. The Aussie got slammed again in today. So this, bear in mind that these are from Asian market open today, still continues to go down. Euro strong, Swiss franc strong, US and yen fairly neutral, and GB pound fairly neutral compared to each other. So really, as we always do, we can look at the weaker ones, which are the commodity-based currencies versus the euro and the yen particularly, or maybe even the GB pound as well. So that gives us an indication of what to have a look at. So we'll just pop on the NASDAQ quickly, because the NASDAQ has outperformed over the last few days. And that's really a reflection of the fact that it dropped 11% on the back of that bond yield rise that we had maybe 3 weeks ago now, or certainly back end of Feb, more than 3 weeks ago. But we can see now that that is gathering momentum. Nice NASDAQ trade to be had if you took that breakout there, and we're sort of punching back up towards those record highs again. But as I said, and as I said last week, I'm not sure we're going to get much more movement between now and next week unless there's something major happens. We are getting continued data that's coming across that says this is a recovery underway. If we look at the economic data, as I said today, is all about PMI data. So we had reasonable numbers coming out of Australia this morning. Look at Germany, we've got the services PMI in expansion, i.e. over 50 and beating expectations. Likewise with the composite, which is a combination of the services and manufacturing. That's beating expectations. Likewise, it was the Eurozone, even though that's still in contraction from the services point of view, that's obviously a reflection of the fact that the likes of Germany are still fairly tight in terms of the measures they've got in place. But nevertheless, that's certainly better than expectations again, and almost in neutral territory. But you can see the composite number driven up by that stronger manufacturing data when that came out is good. UK PMI didn't quite beat expectations, but I'll just put a chart up. If you didn't know you could do this, sometimes worth doing. Just click on it and it gives you a chart. Just scroll it down a little bit, but you can see how really since the beginning of the year this has been an uptrend. Okay, so the blue line is the actual. So you can see we were in contraction down to 40 in January. We moved up to expansion, and though we've missed expectations by a smidge, it's only 0.1 deviation, so that's not too bad. But it gives you context about where we are, and that's important. So we are seeing that slower economic growth right across the board globally. And indeed, the IMF came out last night and was one of the surprises why the US markets didn't do slightly better. In January, the IMF, International Monetary Fund, came out and suggested that growth in 2021 would be at 5.5% globally. They've now upgraded that to 6%, and particularly China, and to a lesser degree, but still better than expected, or better than previous, Australia as well. Europe's a bit shy, but obviously, again, that reflects what's happening. In terms of later, we've got the trades balance numbers coming out of the US. Not a massive market mover, but nevertheless, the market will still want to see a reasonable figure to continue where it's at. I don't expect much from the FOMC minutes that isn't known already, or the Prez. I'm not sure he's going to announce anything new, so I think most of that is going to be baked in. But you know that with those Fed minutes, they're going to pick them apart with a fine-tooth comb, and so we may get market movements with that. So, what's all on it? Well, if we look at the US dollar, there we see that inverse relationship with equity markets. This is why getting that bigger picture handle is important. Whether you're trading shares or not shares, that inverse relationship between the S&P 500 and the US dollar is important. That's back in play now, and you can see what's happened over the last few days. Pretty neutral today, not much going on. But obviously, if we look at precious metals, though still in downtrend on a weekly chart, and if we look at the daily chart, you can see the signs of a reversal. There's a bounce. Okay, we'll come back to that in a moment. But there's a key level on silver, which is at 25 bucks. If we just pop on a gold chart, we'll see a very, very similar picture. There we go. So even though down today, we're smashing against the resistance. So interesting to see the US dollar sort of neutral to negative. We're not seeing any move at all in precious metals. Why not? Why is that? Well, look, it could be all going into cryptos, although they're coming off a little bit too. So you can see that we're stuck at a key level on there as well. There's a long-term double bottom in place on gold, but only in place, of course, when it breaks that level. This could be primed for a bounce strategy. If we look at some of the currencies, let's look at US yen. That's come off a little bit. There's been some yen strength over the last few days. And look at the euro, the US dollar. This chart, I was just looking at it before we started. Here we have a breakthrough the 200 MA. Now we're back through that with some enthusiasm. And we're really at an important level on this. So there was the key level previously. I put on it around about 118 dead. If we just put this on a line chart, you can also see how this level here at 118.77 is important. So we're pushing over that on the daily chart. We look on an hourly chart, and this is starting to look ripe. We had a push over this level 2 hours ago 2 hours and 15 minutes ago, I guess that's that candle there. So closed higher than that. There was the last candle, so just paused a little bit, but now we're getting some buying come back into this. We look at a 30-minute chart. You can see that is quite important. If we put an ATR on this, let's just put a 6 on there. Let's call it 12 pips. So 6 pips above. Let's say 6 pips above this level would be 118.83. So we've broken that. So we're really looking for a close on the 30-minute chart over that pivot high, or a move over it, and to confirm that we're rocking and rolling to the upside. So one that looks as though it's just ready to pop right now technically. Gold is going up on lower time frames. It's interesting, Chris. Let's just have a look at that. So if we look at an hourly chart, well, it's actually been sort of, I would say that's been sort of neutral on an hourly chart. So we can put that line and that line in. You can see how that was support. So it's trading within really quite a tight range of around about $6 at the minute. So what we've got is a potential bounce. We'll come back and investigate this later on. But interestingly, because we're breaking through this level now, there could be a very short-term trade up to maybe, yeah. So you can see there, it's around about $2.50. So you're gonna have to position really significantly to make anything out of this. But yeah, interesting spot, Chris. Okay, so that's euros. If we look at, sorry, euro USD. If we look at Aussie USD, the reverse is the case. So we've got short-term range between 75.93 and 76.58. So around about a 60 pip, 65 pip range there. We're bounced off that really on the daily chart. We look at a 30-minute chart. We can see really on the short-term time frame, ignore the 200 MA on the 30-minute charts. It's a nonsense. Let's just pop it on the hourly chart. We can see how there is potential to the downside, but it's not a chunk in the technical term. So less than 20 pips. So there may be better opportunities than this. We may even see it scoot back up to there and in the short term. So Aussie dollar looking slightly nothing really. It's not going anywhere. We talked about the GB pound. If we look at the GB pound yen, this was a chart that caught my eye. So this is an hourly chart. Let's just pop it on the daily. You can see the significance of this level here. See how it's resistance here. It's looking to hold it as support at 151.85. Pop it on the hourly chart. You can see how that's important. Tested it. Had this pipe formation here almost, and now we're back up to this level again. So we've got a nice line in the sun. In this case, the 200 MA does look as though it's playing resistance on this chart. So the market will start looking at this. So we've got a nice line in the sun to suggest that. GB pound Swiss franc on a 4-hourly chart. I really struggle trading the Swiss franc, I must admit. It's a bit of a bouncy one for me. 4-hourly chart. Nice, interesting rejection there on the 4-hourly of a down move that on that to that 200 MA. Looks as though it's had another shot to the downside on this, and you can see why this level is important that it's playing with right now, because there we had a double bottom formation going on. So it is interesting. Probably that level there you get sort of very interested in if it breaks that. That essentially would be the high in about, what's that, about a day and a half. So put that on an hour chart. There ain't much up to that level. 27 pips. You've got to be patient, I would suggest. But that's really interesting. Nice spot. So that's a good rejection candle there in terms of that downside move. We'll file that for later, okay? Right, what else did we see? If we look at the Kiwi yen, let's look at the Kiwi yen on daily chart first. Again, some Kiwi weakness after really a strong run up, but the last couple of days have been a bit weak. Looks as though it's going to come, looks as though it's a bounce. Okay, so looks as though it's a bounce off that level there. Whether we've got enough momentum to take us through here and back down to 200 MA is debatable, but really limited downside potential. Possibly look at an entry there. Again, 23 pips, better opportunities elsewhere. Let's just quickly peek at the GB pound US, because that had a GB pound had a rotten day yesterday. So you see that big red candle there. There's the 200 MA which it played with. So after breaking through this 200 MA with a double bottom formation, it's actually come back and retested it. Better candle today, rejected a move back through that 200 MA. So that has us looking at this again. Really nice line in the sand once more on the GB pound at that 138.35 level. Again, ignore the 200 MA on the hourly chart. Could be a bit of noise here though. Even if we take, so there's the ATR at 30 pips. So if we take this 15 pips up, it would be that 138.48. That would take it above this noise here and here. But again, possibly limited upside in the first instance to around about 20 pips. Even on the short-term charts, it's proving a little difficult to actually sort of get a potential runner. In stocks, I've showed you Qantas. That was possibly the major story of today. Chart of the day on stocks, we liked Pilbara Minerals for their lithium play. The SX 200 at last has broken out of this range. It's been in forever. Okay, so we've been in this range now since the beginning of the year, and finally we broke through. We had an attempt yesterday, but failed to hold it, moved back to that line again. So the ASX futures are looking pretty good. Okay, so we had and not too late to look at this perhaps, but if we see the US markets go up as well, so there was the break, there was the we're not sure. There is the last, for some reason, the last 15 minutes. Let's just have a look at what's happened to the NASDAQ the last 15 minutes and see if we've got anything. Maybe we've got a shipment of AstraZeneca's vaccine coming across. Yeah, we're not seeing that. Oh, we are seeing that on other instruments. So nice pop there on the NASDAQ as well. So certainly some buying coming into equity futures. Let's put this on a chart, show you. So there's the level to look at with the NASDAQ for short-term traders. That's just why we've been speaking. You love it when that happens. Let's just have a quick back check of the Euro USD on the 30 minutes. That looks pretty good. We've got about 6 minutes left of this candle. That would be a high we haven't seen for, well, really since the 17th of March. So for a couple of weeks, we haven't been this high. So looking for that follow through. So interesting. So that's a little bit of a roundup of the markets, okay? Now, throughout that, we sort of saw a few things that have bounced, and that's good because that's what we obviously want to talk about today. So now, just want to review a couple of things that we've covered before. So how do trading results occur? Well, there's what's happening in the market. Then we've got to put some interpretation behind that. We've got to apply the systems, and then we've got to make decisions and take action. So this all happens psychologically, and then ultimately, of course, that creates an outcome there. We covered this in some detail at the fairly recent Intermediate Traders Clinic when I smashed on about psychology for 2 sessions. It was great. Now we can take this model, which I'm calling Trader IQ, and we can put with system development. We've still got something that we're looking at in the market, except with this, when we're developing a system, we're looking for a frequent identified specific market action. And really, if you've heard me bang on about the 6 ways a market moves before, what's clear, and we'll go through the potential, what that means in a moment. Then we've got this psychological response again. It's all in your head, okay? So we've got, firstly, what we've got to do is say, well, look, is this worth adding to my trading toolbox? Okay, I can trade a breakout trade, I can trade a trend reversal, but is this specific type of price action also worth me considering? Then, of course, we've got to put in the work of system development and then test that system and follow through in terms of live trading. And that ultimately, of course, once again, creates some results. And then we can make decision on whether this strategy is worthwhile or not for us, because of course, we've taken a little while to get to it, but of course you do that through your journaling. If you keep a good journal, you can start to identify which strategies is doing well, in which market conditions and which aren't, so you can make decisions about which to switch on and switch off. And it's exactly the same, of course, if you're creating EAs. If you can find the right switches, based on market conditions, then you're in a great place. So all of these require some learning, some motivation to actually get off your backside and do it, and the volition, which is, get off your backside and want to do it, and the volition in terms of pushing through and making it happen. And you need that to create these systems and subsequently and importantly develop confidence in your new potential system. So irrespective of what we're talking about, this in this case, we're talking about a bounce strategy, then that's the process we need to go through. There are 4 primary key trading approaches. Trend reversal, which is reversal chart patterns, moving average cross, breakout, so that's through support, resistance lines. I would include ascending, descending triangles in that as well. Bounce strategies, which are a short-term bounce, often identified key price level, and the longer-term fundamental idea, which I might talk about later in the month, which tends to be refined with a technical entry, although it's really trading a long-term idea, such as Qantas. If we're interested in trading with that, would be the long-term idea that after the New Zealand bubble may come the Singapore bubble, may come the rest of Asia bubble, and then ultimately we may get sort of further move out, and the market is already starting to price some of that in. And then there are 2 secondary entry approaches, which again we've talked about before. We talked accumulation last week, and the other one is trend continuation, which again I think I talked about a little while ago. Absolutely, get that mirror out, Ross. So, as I said before, we've invested quite a lot of time in these first 2, but today's really all about bounce strategies. Now, again, I thought this would be a useful, just a quick revision. So when we're talking about developing a system, we need to have, so he's a primary trading system. So for each strategy, we need an entry subsystem, which is where we usually start. Then we need a capital risk subsystem, which is all to do with the initial stop, and then your position sizing system, and then your profit risk system, which is to do with trail stops and profit targets. And then we have our measuring journal systems, we have our interventions and their feedback, and we can refine our system. So irrespective of what we're developing a system in, that's worth doing. Now, I thought this would be a really, really useful slide, and I might create a handout of this. If you want it, say, Mike, can you flip me a handout of your 8 strategy development considerations? So the first question you've got to ask is, what does it add to my trading that is not already in place or could be better? So if you haven't got a bounce strategy in place, then it might add to your trading. It's really that simple, because you're not trading it at the moment. Or it could be you've had one in the past and you've made such a dog's breakfast of it that you decided to stop doing it altogether. And is that worth a review, okay, and a revitalize? And I know that's part of the process of developing EA models, is you dump things that aren't working for you right now, and you can put them back on the drawing board to have a relook at them. Next consideration is what primary price action, because that's what we're trading. We're trading price action. Remember, everything you see on one of those charts is market psychology towards a particular asset class. Okay, it's nothing more than that. Okay, the numbers aren't important. It's the movement around those numbers. The price action, is it moving up? Is it moving down? How is it moving up and down? And how long is that going to be in place for? So we start with an idea that let's have a look at price action. And in this case, obviously, we're looking at the price action of a bounce. Then the second question is obviously one of the things we're interested in entry. One of the goals of an entry system is to create a high probability entry. And what that simply means, for those of you less experienced, is we want it to improve that win-loss ratio. We want to start at least to go in our direction for a period of time. We don't know how long that time will be. And really, that's another beast that we need to consider, which is the next one, of course, which is our capital and profit risk management approaches. I've missed the I out of exit. Regarding our stops and position sizing, and with our stops, we also include profit targets and trail stop approaches in that. So that's the fourth thing we consider. After we've got our primary price action, the supplemental evidence to create the high probability entry, which we'll talk about in a moment in relation to bounce, then we've got our exit. Next consideration, and we're really getting down to the nitty gritty, is to consider which market vehicles and timeframes do you tend to use this strategy. I would suggest when you've got a new strategy, you would maybe limit it to a couple just to test it out. Stay away from the Swiss franc. No, that's just my own personal bias coming in. But decide what you're going to use it on and which timeframes you're going to use it on. Now, it could be multiple timeframes, but you might say, right, it's going to be 30-minute or hourly charts, and it's going to be 15-minute charts or 5-minute charts or whatever it may be, or it may be daily charts or 4-hour charts. But you start it on one time frame, and of course, if you've got something like TradeView, which many of you have got exposure for, you can fast track some of this from some of this testing and actually do okay with this. Now, then your next consideration, are there any market circumstances that may increase or decrease the risk in this trading idea? So what are the ideal market circumstances for your trading strategy? Okay, so you consider that, and then the reverse is usually what you want to avoid. So if your strategy is based on a longer term sort of 4-hourly chart, 4-hourly or daily chart, you really wouldn't want a choppy market conditions where there's lots of intraday movement and actually the price doesn't move very much at all. So that may be a market condition which may be to avoid. And of course, that's really more advanced skill, but we've talked about that before. We talked, I think, a couple of weeks ago now, 3 weeks ago, on matching strategy to market conditions. So it may be that you're not quite at that level yet. For those of you who are, then that's got to be part of your considerations. Then, of course, again, a favorite little hobby horse. In fact, we're going to finish with 2 hobby horses of mine for your 8 strategy development considerations. Are statements sufficiently clear and unambiguous to mean that you can be consistent in action and measurement? Does it cover all bases? Remember when we talked about breakout, we need to define what we mean by that. When is a breakout a real breakout? So you've got to define that price action absolutely crystal clear. You've got to say what other considerations are absolutely clearly so you can carry on trade. There's no is it or isn't it when the market shows when you look at a chart. It is or it isn't. It really should be that simple. And of course, is there any additional information I need to record in my journal or review process beyond that which I already use? So it may be that if you're only trading one strategy, then you may be actually not recording the strategy you're using. But if you're starting to trade 3 strategies, as I said, one of the powerful things you can do with your measuring is measure one strategy performance against another, and then try and match it to market conditions, and that'll help you feed back into number 6 there about what market circumstances may or may not work. So as I said, I'll correct the spelling mistake on the X risk, but if any of you want to like that in a handout, I'm more than happy to give you that so you can use it as a little tick list if that would be useful. Now, the bounce price action. So this is where we start. So we're asking the question, what's the trading anatomy of a bounce? What does it look like on a chart? So first thing is we need to identify what we mean by a bounce. A bounce off what? So I've called this a bounce price level. So common examples of these include obviously support levels for a bounce and then it going long, resistance levels for a bounce off the top and then going short, 50 or 200 MAs, and fib retracement levels if there's market adheres to be adhering to fib retracement. I'm not particularly happy about that. We also discussed fractals previously. Again, you can obviously use these when you've got a series of fractals around the same level, which essentially creates a key price point. So if we look back at a couple of charts that we just looked at there, so if we look at the this is really a standard trend reversal that we're sort of seeing here. So that's not really relevant, but if we possibly look at Qantas, so if we look at the anatomy of this, okay, so what we've got is we've got a level that's kicking around at $5 dead. Okay, now we talked about this weeks and weeks ago, back in January and February, as an important level to the upside. But we can see that $5, there's a few things. First of all, it has been support a couple of times. And of course, it's a nice round number, okay? So there is a nice example of a line. If we look at, what was it? It was GB pound yen, I think, from memory. If we look at gold, so we've got on a 50-minute chart, we've got a key level there. So the question is it going to bounce off there or not? Okay. If we look at a daily chart on gold, we've got a key level now in place here and a key level now in place there. So our question is it going to bounce and go down? So I'm just going to have to change my pen color. Is it going to bounce and go down from here? And of course, some market participants will already have this planned in because they'll have sell limit orders placed here. So where market participants are, there's a chunk of sell limit orders here, and there is a chunk of buy stop orders here. Okay, but the question is it going to bounce off this level or not? So we can, there's our, let's just get rid of some of these lines. Get rid of that one and get rid of that one. Okay, so we'll call that our key level. Okay, and so this is what we're looking for. We're looking for a bounce off this level. Now, if we look at a 4-hourly chart, you can see this. Now, there's a couple of things playing on our minds here. There's a 200 MA. It does appear to be adhering to that for right now, but more importantly, this is where it's been before. So it came up to this level and bounced really down, really hard, really fast once it broke was 1719, okay? So the question is, has gold now run its course? And we're heading for another move down on this 4-hourly chart. If we were to trade an hourly chart, then we can ask the same question. Or there's another thing we can do here. We can sort of say, right, okay, there's the 4-hourly chart, but we can also see a level on the hourly chart. So if we are trading the 4-hour, we can use our hourly chart temporary support as confirmation that we've got a bounce underway, okay? So let's just have a look at some of these. So what do we see? Well, we see a number of up candles in this case. We see a candle with a small body and a large wick on both sides. Open is pretty similar to close. That's termed a doji, but we always wait for the next candle confirmation. Is historically what traders have done. But would we call this a bounce? Well, we wouldn't really yet, and why not? Well, if we look, This is what the concern would be. Look at we want an engulfing bearish move that beats that last candle higher, or maybe even these last two candles. Okay, so we may not consider this a bounce unless it breaks that level there. Okay, if we look at our okay, so if we look at our Aussie, let's just get rid of some of these lines, etc. Trend lines and nonsense, etc. There we go. And let's just get rid of our drawings. Okay, so what we've got here is we've got a support in place at that level. Okay, so question is this a bounce? Well, at the moment, what are we seeing? So there's our last two candles on the downside. There's our last one. So theoretically, we could have said on this daily chart, then if we're just taking one candle, then we've got an engulfing bullish candle there with that doji before. Okay, so logically, we could have got in on that and we could have set our stop below that level there. So that's 63 pips down. 63 pips down from there is around about 75. So around about there. So even that wouldn't have triggered our stop. Okay, so we're probably about neutral if we traded this as a bounce right now. Okay, other things we can have a look at. Was it a high volume bar? Well, yes, it was. So a couple of things there. We're starting to put together an anatomy of what a bounce looks like. If we look at maybe okay, let's look at Allison's GB pound Swiss franc. So question is, on the 4-hourly chart, let's use the hourly chart, okay, because we're not quite there yet. So there is our big fat candle to the downside. So are we going to get a V-shape, what looks like a V-shape bounce off this? Well, we can put some tick volume on this. There we go. So you can see that that candle was a good volume candle to take it back up, but we've not yet engulfed this candle here. So you can see that really this isn't a full bounce yet. And because of this price action here, we'll probably be reluctant to take it anyway. Okay, so we'll be looking at that there. So it would engulf at that place there, didn't hold it, and since then it's just sideways trend. So we're not really bouncing hard off that. We'd want to, for a complete bounce, we probably want that on the hourly chart, which would mirror what we see on the 4-hourly chart. So we want engulfing these two candles on the 4-hourly chart to create this bounce. Okay, so we're starting to put this anatomy together. MACD relevant, I'll come back to that in a moment. Not really. In some circumstances, potentially. And remember, we're removing this from this. This is a chart pattern. This is a double bottom formation. So we're not, that's really a trend reversal strategy rather than a bounce. So we may be splitting hairs between what's a bounce and what's a trend reversal, but it's just another type of reversal price action that we're talking about. So if we had a look at something else, we'll look at US yen, okay? So look at US yen on the daily chart. There was the resistance. What did we see? We saw a candle with a large wick to the upside, which was rejected and moved through there. And we saw an engulfing candle there. So potentially could have got in on that candle and traded that downwards. Probably wouldn't on the daily again. There wouldn't be a one-to-one in that, but we might trade it. So here we've got another example. If we look at a we'll look at this as an example, okay? So we've got this trading between two levels. Actually, we might go to the 30-minute chart for this. Just put those two levels on. 15-minute chart. Okay, so if we're looking to trade this bounce, so let's do it. This doesn't really fit, okay? But if we look at this bounce here off this and to the downside, this is more appropriate. So we've got an engulfing bearish candle to the downside after a couple of wicks that were, a couple of dojis together. So we could actually get in on this. You can see it's high volume there. And we could have traded this to the downside with a profit target just around here. We probably would have ripped that off on that engulfing candle to the upside. Again, we would have rejected that as a potential move because of this big red candle. Too many candles before it gets engulfed. We're already halfway up the trend. That really removes the reward from doing this. Again, there's a big green candle there, so we reject this as well. So again, we're starting to put together a little bit of an anatomical description. Let's have a look at the NASDAQ, just randomly. So could we have done this with this? Well, absolutely. There's the downside. Usually you've got an upside identifiable as well. I'm just going to bring that down a little bit. Okay, so could we have traded this? So there's a 42 pip range there. Okay, so there's the last candle there. This green candle is above this one here. No volume, so we'd leave it alone. Okay. Whereas we see here, we've got a couple of bounces off that, and then we've got an engulfing bearish candle. That's better. So we could have potentially traded that to the downside. Now, ATR on this. ATR at that level was 19 points. So we'd probably do half an ATR off that, which would take us up to 13.57. About 10 pips up from that, let's say. So 13.571. So we would have just touched it on that candle there. So we've been triggered. So again, anatomically, what we've seen is we've seen a move up to a particular price level, a little bit of consolidation over a couple of bars, and then engulfing, not a particularly convincing engulfing candle, but it's still bigger. So the close is lower than the previous open. So it does engulf, and therefore we can trade this to the downside on that candle there and pick up. What was the low on that? Didn't quite hit our low, but if we saw that 2 pips away and saw it start moving up, we'd probably take it off. Okay, so let's put some of that together. So we've got a reversal. So we've got candle action involving a reversal candle. So if a doji or a series of end of trend candles, so small bodies and large wicks. Does it matter how many touches are at the previous trend? Then no, it doesn't really. And previous price action around the identified level. So if there's been a previous bounce off that level, that's obviously going to substantiate it. And then we're looking for a pre and post bounce candle action. So possibly engulfing the last candle or the last 2 candles, depending on where you're going to plant your flag of your pre-bounce trend. Okay, so we've done that. We've had a look at quite a few bounce potential trades off that, and that would have done okay. And another one, I guess, would be you have a look at looked at Qantas. Let's look at our other faves. Okay, so here's another example. We've got 200 MA and a previous level to the downside, engulfing candle here. So we can get in on this one here on the strength of that bounce. Doing pretty well so far, though that trade isn't that second entry is yet to Rockenhall's caught a little bit on open with that. And of course, what you've got is a stop. So if we thought this was going to bounce again, we'd put our stop where it closed today. Okay, because that's a break of a potential bounce. We could have thought, well, look, it's going to bounce off that and go back down to 90 again. So we can trade that level on that stock. We could have done exactly the same with our Euro USD. Trading if we're trading a, that's not a particularly good example. That's just rocking and rolling, that one, actually. Look at that Euro trade. Worth coming just to see that. Now, so that's the price action. And just to fill in some gaps, of course, we can look at other things like the price close versus the candle. We can look at volume. We can look at the trend on the longer time frames. So the major EMA. So it's the one time where you might put a 200 or a 50 EMA on a chart. So you could have a rule. Many of you know Nigel Hawkes from previous sessions, but he has a rule that so we could so it doesn't go long. Oops. So if I was looking at this GB pound US dollar bounce potentially, okay, so we'd want it bearish candle engulf that one now. So he would say, well, you'd only go short if we put a 50 EMA on, which is actually that red line there is actually a 50, not 200. So we'd only go short if it's below the 50. We'd only go long if it's above the 50. So if you want to include something like that, then that is potentially worth looking at as well. And then, of course, we want greater than 1-to-1 potential risk-reward ratio, and we could use the ATR for that, of course. Now, exit considerations, because, of course, it's all about exits. So first of all, your bounce level is a great reference for initial stop. So you need to define how far below that is, and you could use an ATR multiple. So you could sort of say, right, okay, 1 ATR below that, anytime touch, and I'm out of there. Or maybe even 1.5 below entry. Whichever way you choose to do that, it's got to be below that defined point, because there's every chance, even with a bounce strategy, that it's going to come back down and test that level again before it subsequently goes up. Now, the problem is, in terms of trail issues, if we just pop back on a chart here, now that wouldn't be an issue. If we were to go short on this, because it's going to have to come down here, at which point there's the 20 EMA, so we could still use the 20 EMA as a stop. If we put the MACD on this, it's still, what would happen with this is you would see the signal line drop. You'd see those histogram levels getting bigger again, and you'd see it. You would see that signal line go back below those signal lines. If that's the case, then you can use the MACD if you want, or you can use the 20 EMA as a stop. That's fine. But if we looked at, let's just look at this Qantas trade. At this stage, so this is the area of bounce. Okay, so this is the bounce we traded. So at this stage, the price action is below the 20 and the 10, and the MACD isn't quite, is sort of almost at neutral. Now, again, that's not too bad. If it's at neutral, you could say, well, look, hey, we're rocking and rolling in that direction, so we're going to use our signal line histogram idea going up. But of course, at this stage, the signal line is actually above the histogram anyway. So according to your exit trading plan, you wouldn't get into that. So we need something else. However, think about this logically. So what we potentially do is we say, right, okay, there's our initial stop here at that point there. So let's put it 492. That's a really badly drawn line. Apologies for that. And until either the MACD turns positive or it moves above the 20 EMA, we're going to use technical landmarks. So our first trail would be if it moved up empty. Sorry, just removed all the drawings. Let's just put a stop line in there. Okay. Put it back on candles. So remember, this was our first entry here on this candle here. So we've got an engulfing green candle when compared to the last one. We didn't actually get a doji or anything. We just knew this as a key level because of previous price action. So in on that candle there. So once it does this, of course, you move your stop up to potential entry. And of course, at this level, it's now back over the 20 EMA. We're in a good place. And the MACD is now positive. Although it's not actually moved above the signal line isn't moved above yet. So we're in a reasonable place. I don't think these are the same EMA. This isn't making sense. There you see, that's why it's a nonsense. Let's see what difference that would make. So we've matched it. Oh, we've matched it now with our there we go. That makes sense because now it's crossed. Okay, so as soon as it crosses, we can start using the 20 EMA. So now we can use the 20 EMA as our stop. So we're now up to here. Our first accumulated position is now in profit. Our second accumulated position, then that's the maximum risk. Okay, so the MACD, to answer your question from way ago, Ross, the MACD might be relevant, but if the MACD is showing it's still in downtrend and you're trading the bounce, then you've got to find some other way of trailing a stop. So you've almost got to have a hybrid. So you would have if the MACD is in the direction of the trend, then you're going to use the MACD signal line. If it's not, then you're going to use technical landmarks to trail your stop up. If you use a 20 EMA, then you would be sort of saying, well, look, if it's below the 20, well, you could sort of say, I'm not going to get in. If it's below the 20 EMA, that would be one way of doing it. So you're not going to enter unless it's above the 20 EMA, or you could say until it breaks the 20 EMA, then I'm in a place where I'm going to use technical landmarks to trail a stop. Or you could just say you're going to use ATR levels. So you could say I've set my ATR, which is 1.5 below my entry place. If it moves up an ATR, I'm going to move it up to break even. That will be even simpler and nice and unambiguous. There's no ambiguity about where am I going to place it. Does that make sense? Okay, and of course, because this is a bounce strategy, it's often trading within a longer range. So you'd essentially usually have, if it bounces off support, you would have a profit target below your next resistance to the upside. In Qantas's case, you could argue that this should have been the profit target and it should have ripped it off today. Thank you very much for the memories, but I'm quite happy to hold this for a little longer. But if that was a shorter term trade, then certainly be looking at that. So with Euro USD, okay, just say this is a bounce, not a breakout. Exactly the same principle. I would look at our next level, would see it sitting there at 119.49. So, and then we take our ATR, it's 20 pips, so put it 10 pips below. So 119.39, about there-ish. Profit target. Okay. So there we go. So that's your bounce strategy sorted. So there's no reason why you guys can't develop a bounce strategy and test it out. Which, of course, brings us on to the next issue, which is how do you implement your system? Well, first of all, of course, you've got to develop the system. I've given you the considerations. I've given you an example now. Then you can do a retrospective test just to see how it works for you. Obviously, there's various ways of doing that. Then you do a prospective test live on a demo. or some of you may be brave just to go for it. It's your call whether you do that. There is certainly merit in doing a prospective test because it's testing you and actually implementing that system. You can refine your plan, obviously, based on what you find. And look, why trade 1% of your account? And certainly, if you're not going to forward test, why would you do that? Okay, so the idea of any trading, and we talked about this, I think, that psychology thing again, about really your trade balance is your barometer for what you need to work on next, or whether the changes you make are actually making a difference or not. Until you're in a position where it's actually generating an income which you can take out, then until that stage, what you're doing is you're testing, refining, testing, refining, testing, refining to see what's going to create the right results for you. And so using that trade balance as your barometer, you can sort of say, well, look, it seems to be working okay. If you put in a change and it makes a difference, but that's a change in an existing strategy. If it's a brand new strategy, why trade? Remember the aim, back when you started trading, the aim was to sort of say, well, look, can I make some money out of this? You can answer that question trading micro lots. You don't have to trade 1% of your account if you trade a new strategy. You could trade 0.01, on every trade. And if you make an average of $2 a trade, then you know that strategy makes money, and then you can scale it up. You need to have an identification tag, I've called it, in your journal to identify which strategy. If you're only trading one strategy at the moment, I referenced this before, then you need some way of identifying the strategy you're using within your journal. Call it a name. Think of a fancy pants name if you want, just to make it a little bit more entertaining. And then you scale up. Once you know it's going to make money, you can scale up. So you can take it from a micro lot to a mini lot to a standard lot, depending on your account size. And then you're going to review as you would with any other strategy. And of course, if you do all the things you should do, you're in a position where you can start to test alternative parameters. One thing that I would suggest is that you have a critical mass of trades before you move from one state to another. So it may be that you retrospectively have a look at 20 trades, see what would have happened. Prospectively, perhaps 10 trades, see what does happen. And then you're going to do a formal review after your first 20 trades trading the strategy. So actually plan that in. Okay, so I thought, again, it was useful in terms of your system IQ to have a final process there. And again, this obviously has applicability to those of you who are trading EAs as well. So just checking through. Right, okay, so really, your actions. Consider this as a strategy to add to your trading toolbox. If you want to use those 8 considerations discussed to refine your idea, then feel free to do so. But you may already be at that stage where you can do that without much of a drama. If that's the case, great. If you want that, slides, a handout, drop me a line. And of course, write a draft initial plan, as we've discussed, and follow the implantation process. We're not going to implant it into anything apart from into your overall trading system, of course. Your implementation process, I should obviously read. You're welcome, Adrian. So yeah, look, it's up to you guys to take action on this. Fantastic, Brett. Glad it was useful. And I hope the sort of general information about putting systems together, etc., was useful, because it's not just a course about one system, and you can use that process. Well, look, I've considered everything within the systems I'm using. So look at what happens when I take somebody through a coaching process one-on-one. Then those of you who've been through it will recognize a lot of what I've talked about today in terms of taking you through some stuff. So yeah, so that what I've done today is as I said, I'm reviewing something to launch pretty soon, so keep your eye out for that. But obviously what I want to do is give you things that you can use, not just for what we're talking about for right now, but that have applicability outside of that. So I hope that's I hope that sort of mission achieved to some degree. Thanks, Rod. Hope you're feeling good. And glad that you've had some knowledge implanted, Wayne. Rachel, you're always welcome. You're welcome, Walter, and good stuff, Josh. Did you cut a message short there, Josh? Oh, you're welcome, Tony. All good, David. I'm always interested to find out how you put this into practice, Alison. Josh, drop me a line if you want the recording. I'll make that available to anybody who wants to have a replay. No worries at all. It's mike.smith@gomarkets.com. Anyway, guys, look, I've once again I've talked quite a while actually. All good. So we've been in play for just a little over an hour, so I hope that that works for you. Take care of yourselves. Hey, trade safe. Have a great weekend when it gets here. Oh, look, I'll see you guys. For those of you who are not part of the gang, just if you want to join the live update session tomorrow morning, remember that if you want to see that accumulation detail, I can send you a recording of that. But if you're not part of that group, which means at lunchtime, you guys in Perth, we've been messed around a bit with our time. In fact, you guys in several states apart from the East Coast, in fact, to accommodate them again. So I've just put it into chat for the live update if you want the link to that. There's another special session next week, which is the fourth of our intermediate trading clinics. I would love to have you there. If you're not registered for that, I'll give the link out at the update sessions and in next week's Inner Circle. It's a week on Thursday. So all good. Anyway, okay, well, that's it for now. So take care. We'll see you very soon. And yeah, see you tomorrow. Catch you later. Bye-bye for now.